Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Tesla report for Friday, January 20th, 2023. Before I click on the charts, as usual, please click like if you haven't already and subscribe. Helps us out a great deal. And share the content if you would with friends and colleagues. You know, before I jump to Tesla, I did include a Amazon chart here. This is a daily Amazon chart. If you've seen the Amazon video we put out a week ago, this is kind of a heads up that the channel structure that we showed on that Amazon video, it's free on YouTube. You may have already seen it. If you haven't, you can easily find it in our Wicked Stocks YouTube channel because it's a relatively recent one. Anyway, we have fallen off from that channel top. It is holding, and so you might want to watch the video to apprise yourself of support that is now in the low 80s, upper 70s. I'm not going to even show that here. We also put out a key reversal high on Wednesday, pushed onto a new 3-week, 4-week high, actually more like a new 2-month high. And then we fell off and closed below Tuesday's low. That was a sign of weakness in itself. So I just wanted to let you know that Amazon resistance is holding and it remains susceptible to falling back into the upper 70s, low 80s over the next few weeks. So let's take a look at the big picture. Once again, we closed below this channel support, now resistance. Is between 158.81 and 166.92. We did so the week of December 12th. And in the process, set off a sell signal down to this channel support. That was a 3 to 5 week target we reached in about 2.5 weeks. It is presently between 95.29 and 106.99. And if were to be retested over the next week or two, can still contain selling through February, and above which this long-term resistance in reach. I say that this is long-term resistance, and I should emphasize why. Because I think that this structure, if it's to be tested over the next 2 to 3 weeks, 3 to 5 weeks, 158.81 to 166.92 is dropping. It's a band of channel resistance dropping gradually. If it were to be tested, I think this is a significant ceiling that may well contain buying into the second quarter. And following a test of that, not only can we fall back to this channel support again, but perhaps even lower. There's no clear indication of it. I also see a long-term buy signal if we close above 166.92. So I don't obviously know exactly what's going to happen, but I will say that if we close above 166.92 in the coming weeks, that we have a good low, probably into later year. I would expect by the end of Q2, the 230s or 240s, possibly sooner than that, possibly within a couple of months of closing above 166.92. But until then, this area is our long-term pivot point. And I do expect to actually retrace up to it, holding above this area here. So let's kind of take a look at, one of the things I regret about these charts is, you really have to look all the way back a full year on a daily chart to see where these trend lines are. This trend line held this week at 136.38. It was considered a 1 to 2 week target following an intermediate buy signal that we had above this channel structure that is now at 111.09, well below the market. If you've been watching the daily Tesla report for the last few weeks, you know exactly what I'm talking about. We came off this 136.38 trend line. It is dropping gradually every day. It can contain buying through next week, and below which we can fall to 116.79, I say, over the next week or so of trade. And do I show that? Yes, I do. Let's zoom in. So there's no particular order to these charts, so I'm just kind of showing you that for the day, if you recall, we have that long-term trend line that I think, actually, it's probably worth showing here. This long-term trend line here is at 123.10 today. We did close above it Tuesday. Wednesday was the high. And Wednesday, we actually fell back down to the 123.10 trend line on an intraday basis, and we tested it again on Thursday. It did essentially hold day support. And once again, it comes in right here at 123.10. And as it turns out, there's also a 1.5, 2 week rising channel bottom today at 121.55. So this is the area, 121.55 to 123.10, that is decent day support. It may well contain selling into later next week because from here, we can rally back to this 136.38 longer term trend line again within a matter of possibly 3 to 5 days. So there's that. Hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. Let me continue with the downside today, though. I mentioned 116.79 as our support that is in reach over the next week or so below this 136.38 trend line. And so 116.79, if things get ugly today, it may actually be in reach today. If we break this 121.55 rising channel bottom, then 116.79 does actually become an intraday objective where we can place. Well, to say that we're placing a weekly low here is not much of a stretch given the fact this is the last day of the week. So what I'm going to say is 116.79 can actually contain selling through next week. And from here we can rally back to that 136.38 trend line again within a matter of possibly 3 to 5 days. And so if we're looking at kind of like the short term, there's your 116.79 and there it is again. So if we're looking, say, at the next full week of trade, and let's say you're an options trader and you trade short-term options, if we test 116.79, you could reach 135 out of the money calls that don't expire for at least a couple of weeks. If you only go 1 week out, you might actually be right on the direction and then see nothing in return as the market takes a full week to approach your 135 out of the money call. But I'd go a couple of weeks out on that. So if you test 116.79, you're buying 135 out of the money calls. If we test this 136.38 resistance, you may consider buying a 116, 118 out of the money puts that don't expire for at least a couple of weeks. That is sort of the ping pong activity that may play out here over the next week of trade. But also keep in mind that having come off of this mid to longer term support in the 95.29 to 106.99 region over the last couple of weeks shown here, we are still poised for outright bullish continuation into this 158.81 to 166.92 region. And if we happen to close, it's not going to happen today, but if over the next few days we do muster a settlement above this 136.38 trend line, you can see we're only a week or two away then from reaching this 158.74 to 167.14 area. The numbers are slightly different, of course, on the daily chart. Where I mentioned earlier, we could top out into the second quarter and fall back to new lows following a test of this upper area. It would be a settlement over the next few weeks above 167.14 that would tell me that we've got a good long-term low and that we should push into the 230s, 240s over the following several months. I'm going to get back to the day here briefly. If we break 121.55, 116.79 in reach, holding above 123.10, we'll keep 131.49 in easy reach. 131.49 is the high settlement price so far following this move low that was put out on Tuesday of this week. It can contain intraday strength. And if we push through 131.49, that 136.38 long-term trend line in reach again, where we can top out through next week and from there fall back to 116.79 within a week or two. Once again, closing today above 136.38, expect this targeted 158.74 to 167.14 region within a couple of weeks. Now let's talk about the possibility of closing today below this 116.79 speed line. I'm not expecting it, but if we do close below 116.79, we should unwind all the way back to this zone of long-term support. It's dropping at a pretty steep rate. It begins this week at 95.29 to 106.99, but it drops next week even lower. So keep that in mind. If we close below 116.79, we should fall back into the low 100 area, low 90s, I'll call it, within a week or two of doing so. And that is once again this speed line here, a rising 2/3 speed line incorporating the recent low from a few weeks ago against Wednesday's pullback high. I don't think that there's really anything else to say. I'm going on 9 minutes. I never like to push to 10, and I'm going to leave it at that for Friday's Daily Tesla Report. I'll be back Sunday afternoon with Monday's Tesla Report. Please click like and subscribe, and you have a great weekend.